so we have depreciation. 300,000 depreciate over 5 years. No salvage value. 100% rate.
Okay. And this is where I'm going to make a little bit of a change.
Okay.
We're going to have the straight line depreciation for book purposes be 5 years and taxes be 3 years.
Okay.
Okay. So, and this is where your second page comes in.
Yeah.
Oh. I guess I did do that. It was just right next to it instead of on a separate page.
Thanks.
Like, oh, there it is. We didn't link any of them to that though, but that's okay. So this will be for the depreciation. We're gonna have the cost of the asset, salvage value, even though there isn't any, our depreciable base, and then estimated useful life, and then the depreciation. Then we're gonna have book and tax. Okay. So it's $300,000 for both. And then there wasn't any salvage value. Okay, and then this is where we're gonna change the estimated useful life. So for book, we're gonna make it 5 years and just keep it the same. And then for tax, we're gonna do 3.
Okay.
And then so to get the depreciation, we'll just divide the depreciable base by the estimated useful life.
Okay.
And it should be 60,000 for book purposes, and then 100,000 for tax purposes. And then this is where the rest of that depreciation table comes in. So you would do like the book for 5 years, and then
Okay.
tax for 3 years. Okay, so we can do that all up to the side. So 2014. That should be right. Okay. So we'll have our book, tax. So it'll just be 60,000 all the way down for the book. And then 100,000 for 3 years for the tax. I'm gonna go ahead and get rid of this part. So is that making sense how that's set up and everything? Okay. So then we're going to find our M1 difference, and this should be the number that goes on the spreadsheet,
Okay.
just depending on like what you're doing. So M1 difference, and have a cumulative difference. And kind of the reason for the cumulative M1 is to make sure that it goes down to 0. Because this is a temporary difference, and so they should eventually equal out.
Okay.
So we're just going to take book minus tax to get our M1 difference all the way down. And then in the cumulative column, for this first one, it's just going to be the negative 40K. And then to get this second one, we're just going to add both of those together. So it'll be
Wait, add which ones together?
this one.
Mm-hmm.
Okay, so this is the balance at the beginning of the year, essentially. Wow, essentially.
Mm-hmm.
And then you're going to add in what you would do for the next year.
Okay.
Or like, say we're looking at 2015. In 2014, we deducted 40,000. And then in 2050, we're also deducting 40,000. So we're just adding that together, and this is just keeping a running total.
Okay.
So for the next one, we're just going to add both of those together.
Okay.
So here you can see that in our cumulative M1, we have negative 120,000. And in the next 2 years, this is going to be a positive 120,000. So they're going to net to 0.
Oh, yeah.
So here we're going to have negative 60,000 and then 0.
Okay.
So is that kind of making sense for that part?
Uh-huh.
Okay. Alright, so I'm going to get rid of that and then start adding on to the spreadsheet. Okay, so we've got depreciation. And then for the current year, we're going to be able to deduct 40,000 more for tax purposes than book purposes.
Okay.
And would it help me to like do that, like the beginning balance thing and kind of show what's going on?
Yeah.
Okay. So we'll have beginning and depreciation. So depreciation is 60,000. Okay. Hard to think backwards on this. Okay. So we've got 810,000 as our beginning balance, and what we're doing for book purposes is we get to deduct 60,000.
Okay.
That's what we figured out in the depreciation schedule.
Yeah.
Okay. So we get a depreciation expense of 60,000, which will bring our PTFI to 750,000. But then for tax purposes, we get to deduct 100,000 total.
Okay. Yeah.
So for our depreciation up here, we've already deducted 60,000, but for tax purposes, we get to take 100,000. So we need to make this number be 100,000.
Okay.
So on our PTFI, 750,000, and we're trying to get to our taxable income. And okay. So what are we going to do to this number to make it 100,000? Well, I guess technically negative 100,000, but like
Yeah. just add 40,000.
Okay.
Um,
Sorry, yeah, that should be negative 100,000.
okay.
So we're deducting 60,000 here, but we can deduct 100,000 here. So 60,000 of that is already in our 750. And so yeah, we are gonna have a 40,000 here, but is it gonna be positive or negative?
Negative.
Mm-hmm. Which will give us a taxable income of 710,000.
Okay.
So does that make sense, kind of what's going on?
Where'd you get the 810,000? Start out with?
I added 60,000.
Okay.
Because I'm just trying to like keep our PTFI the same
Yeah.
and just showing what's going on. So yeah, so I just added 60,000 to get that 810,000. You can see our beginning and the taxable income at the end is 100,000 difference.
Okay.
So, I'm trying to think what I was going to say. I can't remember.
Yeah, that makes sense.
Okay. So sometimes, I don't know, it just kind of helps to visualize. So you can't really do that with every problem, but I don't know, you could, but this is just kind of showing just conceptually what's happening.
Yeah.
Okay.